Europe's top central banker tells the politicians they should do a lot more to tackle the debt crisis. Mario Draghi says the current setup is unsustainable. Can the eurozone survive, or is a complete collapse looking more likely? This is Inside Story. Hello, welcome to the program. I'm Hazem Seeker. Well, the head of the European Central Bank is urging member states to take immediate action towards a clear vision for the next few years. He's warned that the structure of the euro currency union has become unsustainable. Draghi criticised political leaders who he said had been slow to respond to a European debt crisis now well into its third year. And it appears Spain has replaced Greece as the epicenter of the eurozone crisis, for now at least. New data shows worried investors are pulling a record amount of money out of Spain. The central bank says around $120 billion have left the country in the first 3 months of this year. But Spain has denied talk of a bailout from the International Monetary Fund. Mario Draghi also criticised Spain's handling of its banking crisis and warned that the current structure cannot survive.
That configuration that we had with us by and large for 10 years, which was basically considered sustainable, I should add, in a perhaps myopic way, is being shown now to be unsustainable unless further steps are being undertaken.
Mario Draghi went on to say that individual governments need to come up with a clear long-term plan.
Can the ECB fill the vacuum or lack of action by national governments on the structural front? And again, the answer is no. Structural reforms don't have much to do with monetary policy. Can the ECB finally, let me come to the point, can the ECB fill the vacuum left by the lack of euro area governance? And the answer is no. So let's ask, what can we do now? What is the next step? The next step is, and I did say this in the European Parliament in the course of our last hearing with Econ, the next step is to basically, for our leaders really, to clarify what is the vision from a certain number of years from now.
Well, all of this has taken a toll on the value of the euro currency. It fell to its lowest level in almost 2 years against the dollar. The euro has also slid for the 7th day versus the yen, the longest losing streak in 4 months, and its lowest level in more than a decade. It all spells a growing lack of confidence in the single European currency right now. So is the eurozone really facing disintegration? Is it realistic for all 17 members to remain in the eurozone? And what can be done about it? Well, to help us answer these questions and more, we hope, we're joined by our guests in Paris, Jessica Chambard, Vice President of the European Movement, a group that aims to promote European integration. In London, we have Robert Olds. He is the director of the Bruges Group, a leading Eurosceptic cross-party think tank. Also joining us from London, Charles Davis, head of macroeconomics at CBR, the Centre for Economics and Business Research. Good to have you all with us. Jessica Chambard in Paris, if I could start with you. Your view on the comments that we heard there from Europe's top central banker, is it something that you've been waiting to hear?
Well, we've been waiting to hear, generally speaking, more affirmative action from the ECB, and indeed these comments were something we were, of course, expecting. But I must say that further reaching than those comments, which are in the line that were what was heard in the past days, in the past months also, I think that what we are expecting in particular is a next step of budgetary, fiscal, economic integration in order to get out of this crisis. So I think we definitely need to go much further in those type of reactions.
But given the limits of Mr. Draghi's job, and he alluded to that in the two clips that we played earlier, he's not really in a position, is he, to go directly to politicians for further action? And even if he was, where would he go? I mean, you're talking about 17 member states, all with their own different agendas and their own different interests. Isn't this part of the problem?
Yeah, exactly. I do completely agree with that. I think that it shows that now the situation where we need unanimity, where each country can decide on its own and block the system, has shown its limits, and that's exactly where political power, but of course the role of the ECB, the role of the Eurogroup, the role of all the interest groups pushing towards saying that we need a step further in the European fiscal, budgetary, economic integration is actually, these voices are being raised and are getting stronger, because this is for me the option, the only way that we can get out of the crisis, or at least one step further in the European integration, in order to play this strong role on the international scene.
Charles Davis, closer European integration is the only way we're going to get out of this mess, but I know you don't see things that way. Tell us why.
Well, certainly European integration is one option, but I still don't think it will solve some of the fundamental problems you've got at the heart of the single currency project. And those are the structural differences between the economies. I mean, one really good way of thinking about this is when you look at exports. Exports fundamentally are a way in which a country earns its living and earns, its right to have living standards. And in Germany, obviously, exports have grown very strongly through the history of the eurozone, whereas in somewhere like Greece, even in Italy, and certainly in Portugal too, we've seen exports decline substantially. So it's not clear to me that economically it works very well in the long run unless you have a large transfer, fiscal transfers from the richer countries that are doing very well out of the eurozone to the peripheral countries that are really struggling. So that would really be a large subsidy coming probably from Germany, if we put it bluntly.
So do you think there's too much emphasis on this idea of European integration and the political aspect of it more than anything else?
Well, I mean, the difficulty for someone like me is obviously I try and look at things with an economic logic to it, but I don't think this has ever really been a project so much about the economic logic, because there are simple ways in which you can argue that it's not an optimal single currency area like the United States is, really, because in the United States people, goods, capital can move entirely freely around. When, say, if one state of the United States suffers a bad economic performance and has a very high unemployment, then people would move away. But that just won't happen in Europe. People aren't just going to leave Spain and move to Germany, I'm afraid. That's not how things operate. So I don't think it really works very well when you look at the pure economics of it. But obviously, when you look at the big picture, one has to be aware that it's really a political project, and it always has been. And so I don't know how far economic logic can take us.
Robert Olds, if I could turn to you on this. I mean, we heard in some of the comments there from Mario Draghi, who's only been in this job for 6 months now, but already he's essentially saying, I can only do so much here, and it's up to the politicians to really sort this out. Is that a fair assessment, that he's basically limited in what he can do?
Well, he's already done a lot. He's, through the LTRO, the long-term refinancing operation, injected around €1 trillion euros into the European banking system. That's still not enough. And so he's quite right. There is only so much he can do. But
so
really
he's run out of moves, essentially, hasn't he?
Well, yes, basically, yes. What needs to happen is the politicians do need to take action. They do most certainly need to recognise the serious problems that they're facing. So far, they've been pretty much burying their heads in the sand when so many people have been predicting this for quite some time. They need to recognise that at the heart of these problems, as Charles Davis correctly said, I'm in full agreement with his analysis, is that the euro is at the heart of this, and the competitiveness problem that it causes, how it creates disbalances within the European Union, within the single market. It allows Germany to dominate the import markets of countries like Greece, Italy and Spain, and it makes it more difficult for those countries to export. It makes their exports more expensive, and it's really creating a major imbalance within the European Union, which means that these countries are getting poorer and poorer, and they're getting greater economic debts because they can't compete economically with the powerhouse that is Germany, because the single currency, for many complex reasons, such as how they have efficient economy that takes advantage of their low unit labour costs, allows them to export cheaply to other countries within the eurozone, but those countries can't compete, so their economies are declining, and their trade deficit is basically funding Germany's balance of payment surplus, and they're just getting deeper and deeper into debt, and this is an unsustainable situation. It's not an optimal currency area. The politicians need to recognise that their grand political project of having a single European currency for many diverse economies across the EU just doesn't work, and they need to go back to national currencies. That will cause difficulties in the long term, but each country having its own currency where it can manage its own economy for its own best interests to get the economy moving again, get people back to work, which is a fundamental thing which governments need to embark on. That's the way forward. They need to recognise that the euro is a failure, and having more political integration would just create greater trouble for the future. We have a competitiveness crisis in Europe caused through the euro. It's failed. We need to move on from that. We need to go back to countries having their own currency.
Aren't you worried about the consequences of a eurozone collapse and all of the implications that could have?
Well, it's not as severe as people will say. What we need is that we're looking at the moment, in particular Spain. Spain is predicting it's going to have a massive bailout. I was predicting recently that it would be around 100 billion euros. Now it's looking that it could be as much as 300 billion euros needed to bail out Spain. That would come from the IMF and other sources. Europe just really doesn't have enough money to put into the Spanish system. But when there has been a bailout of countries, such as through the IMF, there's money given from nations around the world, but a bailout is accompanied by something with there's monetary easing and a currency devaluation. The currency can't devalue in Spain because they're in the euro, and it's just far too high for their needs. It might be declining slightly, but it's still far too high. So really, Spain's freedom of manoeuvre is greatly restricted because it's in the euro, and any bailout will not work. It will just put off the evil day for when these countries do have to exit the failed single currency.
All right, we'll talk a little bit more about some of this in just a moment, but I'm going to widen this out a little bit and talk about the eurozone rules, which were put in place more than a decade ago, in theory, to prevent all of this. Now, member states have to fulfill certain economic and legal conditions in order to join the eurozone. The convergence criteria are meant to measure price stability to show inflation is controlled, the sustainability of public finances to avoid excessive deficit, a stable exchange rate to show if a member state can manage its economy without excessive currency fluctuations, and long-term interest rates. Member states must also amend to their national laws and rules, notably governing their national central bank and other monetary issues, to make them compatible with the treaty. Now, Charles Davies, if I could turn back to you on this, these are the rules that are supposed to have kept all of the countries avoiding this situation that we're in right now. What went wrong?
Well, for a start, there were some basic problems, it turns out, when you look at the Greek information that was submitted. Some of the public finance information was inaccurate, and so that was a problem. Then you had countries actually not even following the rules that they'd probably created themselves. So, for example, I think Germany and France both actually broke the borrowing requirement, which was something like 3% limit of GDP where public borrowing could be. Before that was actually way before the financial crisis in the I think it's in the mid 2000s. And so even from the countries right at the core of the eurozone project, 2004, thank you, there wasn't the fiscal discipline, and that obviously sets a precedent for them what happened, which was of course the huge disruption from the global economy, which then basically ruined the public finances of many countries throughout the West. I mean, obviously not just in the eurozone, obviously here in the UK, but also over in the United States, a massive shock to the public finances has taken place. And the difficulty we now have is that most investors are looking at the situation and saying, well, I don't know if you can pay back those debts now because your economy is not competitive enough. So I don't know how you can get the growth to actually pay back these debts in the long run. And that's clearly what markets are saying when you see yields in Spain now even getting up towards 7%, where and obviously in Greece, Ireland, and Portugal we've seen yields way in the double digits. So it just the wheels have really come off in terms of markets no longer trusting what was originally put in place.
Jessica Schomburg, was this all about political integration without really taking into account the long-term implications of this? I mean, were they in too much of a hurry to start up all of this?
I think I completely disagree with one basic thing that was said just right now. It seems that in what was said, we have the feeling that the crisis that is taking place actually is a crisis generated by the eurozone. I don't think it is a crisis generated. But it's not that I don't think. It's what also Charles just said recently. It's more a question of countries having those debts and noting rating agencies degrading the values, and we have a debt crisis, and we have a crisis linked to the fact of how we are able to of the banking system, basically. So it's the eurozone is something completely different, and I do believe that the eurozone is actually what makes us hold together. And if you look at what the situation was before, when each country could was on its own with its own currency, where what would you have? Well, you would have devaluation and inflation for the country, so it would bring other problems. So that's just one thing I wanted to point. Then, of course.
Yeah,
sorry?
I just want to ask you. I'll let Robert respond to that in just a moment. But I just want to ask you, Jessica, what is the solution to this then? Because if it is more austerity, voters in France have already rejected that approach, as voters in Greece have as well. I mean, where do things go from here? It's not just more austerity. I guess it's for every country. We cannot continue spending more than we have income. So that's a basic, every father in a family knows that. In French we have that expression, en bon père de famille, you should not spend out what you don't gain, and that's a basic thing, and I believe that's a basic rule for all economies and for all businesses. So that's just one thing that all countries have to work on it, and all countries, the interest in particular of being together in the European Union is that you have a level of economic mechanisms that you can activate by being together that you cannot activate if each country stays on its own. And the solution that each country on its own would have are actually solutions that would gather more problems than they would generate solutions. So we are in a situation where the countries have been creating debts more than they were actually getting money. They need to relook, generally speaking, at what are their expenditures, what are their income, how can we organize and how can we reshape our general budget. So I think that all European countries are doing this right now. And of course, austerity is one of the possible solutions. Also, trying to create growth from other means is a possible solution. But in any case, I do believe that more European integration is an added value and a leverage value. Robert Olds, tell us why you disagree with that. You were shaking your head there before.
European integration isn't the answer. We are to expect that the countries of the European Union, the member states of the EU, would accept a rule from Frankfurt and from Brussels that their policy, their tax and spend policies, will be dictated by the unaccountable institutions of the European Union. That will just store up trouble for the future. The EU is undemocratic. It's even sort of anti-democratic in that there's very little involvement from democratic nation states. Really, that is not a solution to pass more powers to those institutions to then dictate. How will the French and the Germans in particular, do not want to be spending money to fund Southern Europe and their profligacy, as they would see it, and Southern Europe doesn't want to be, as we see in Greece, dictated to what their policy should be by Germany. This craze of having a greater centralisation is just creating ill feeling. It's creating disharmony amongst European nations. We see that in Greece about how they're really find it a great affront to be dictated to by Germany, which breached the rules back in 2004 and carried on spending and borrowing too much money. And now, of course, Germany's dictating how they should be run. This is storing up trouble for the future. What is needed is that if countries had their own currency with their own central banks, which could create money was where they thought it was appropriate, just like Britain has in the UK, and the Bank of England, it would be able to have more economic levers. It would be able to devalue the currency. It would have control over monetary policy, can embark on policies such as quantitative easing. All these things are not possible when a country is in the euro. And in the UK, Britain would have been in serious economic difficulties if it had been in the EU.
Let's talk a little bit more about Greece then. We've got these elections, another round of elections coming up after only a few weeks. And if the Greeks vote again against any of the parties that agree to austerity, where does that leave the rest of the eurozone? I mean, are we going to seriously have to look at Greece pulling out of the eurozone entirely? And what implications is that going to have? Charles Davis.
Well, actually, 2 years ago, my chief executive was speaking in Athens at a conference and said he thought the only option was for Greece to default and devalue. He was called irresponsible by the Communist Party of Greece, but I think probably the Communist Party of Greece, I don't know specifically, but I imagine many of the parties of Greece would actually now come round to where my chief executive's view was 2 years ago, which is that it probably isn't sustainable for them to stay in the eurozone unless they take a huge amount more austerity, which there is no political appetite for that. I mean, clearly, I completely agree with some of the other points that have been made that it's going to be very difficult. It's not easy to run if you devalue as a small, open economy. It's very difficult. Of course, you'll have inflation. I mean, I would be, drawing parallels to the experience of Argentina after they had to basically default and had suffered from a collapse of their currency. I'm afraid you would see a very difficult scenario if you did devalue, but then at least you would have more control. Pardon?
Yeah.
Sorry?
It's better than inflation is better than deflation in these economies.
Well, I think, at the moment, I think the economies are locked into a cycle which I'm not sure they can get out of, because actually, if you look at export data in Greece, there was some modest recovery last year, but recently Greek exports growth has weakened considerably. I mean, Ireland's perhaps the only reasonably promising case, because Ireland's export share of GDP is so large, and Ireland actually has a reasonably competitive export sector. But for many of these other economies, I do just think it's so difficult. I mean, I'm not saying this out of any sort of political or ideological position. It's just purely, it is so difficult economically if you have a really low export share and you're just having to cut back demand by imposing austerity measures. That's cutting government investment, cutting government spending, but also imposing obviously greater taxes whereby your population is then going to have very weak consumption growth. And so you're basically left in a spiral where your economy is declining, yet your debt isn't going away. And that's the situation we're in. Whereas at least if you devalue, there are options to try and get the export sector competitive again and earn your way.
Yeah, I mean, let's put some of that back to Jessica Schomburg then. I mean, part of the problem here is that whether the political will is really there. You talk about a more harmonized European policy in which all of the governments are acting in a unified manner. But you, again, and not to want to repeat this too much, but you are talking about 17 different governments, 17 different parliaments, all of them with their own agendas. How do you get all of them to be on the same page here?
You get all of them to be on the same page when you are at the bottom of the wall. If you have this picture also in English, I don't know if the expression exists, but when you are facing a difficult situation and a crisis situation, I think what was just said was very interesting. The solution of pulling back one alone, everybody alone, well, if you come to the Argentinian solution or other solutions, I don't think it brings you very far away. But when you put all your economies together, actually you can find leverages of solution. And I would like to point that the European Union is not undemocratic. I mean, you elect your EP members, you elect your national governments who are in the council. So actually it's also the citizens that could be accountable for what is going on at the European Union level. So I do believe that we needed
the European Parliament has very little power.
I was sorry actually that we needed to get to this crisis, very deep crisis situation, so that all of this debate was actually all of a sudden coming up again. Should we foster the European integration, or should we get out of it? It seemed that in the past years there was some kind of a status quo which was not making any kind of progress. But I do believe that the solutions are in more and more integrated and a more political Europe.
That's going to have to be the last word. Thanks very much to all three of our guests in Paris, Jessica Schomburg, in London, Robert Alds, and also in London, Charles Davis. Thanks very much for your contribution, everyone.
Thank you.
And that's it for this edition of Inside Story. Remember, as always, you can send us your feedback. Email your thoughts to us at insidestory@aljazeera.net. I'm Hazem Sika. Thanks for watching. Bye for now.